This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 9th, 2015. Euro dollar. So the euro has come back under pressure in recent trade, with the market now trading down towards some key support at 107.13. If you look at the past several days, we've defined price action between 110.53, the high that we saw back on the 26th of March, and 107.13, the low from the 31st of March. And so a break on either end would be required for clearer directional insight. If the market were to take out 10.53, it would signal a more significant correction in the euro off these recent 12-year lows and towards maybe the 112 to 113 area further up. If, however, the market takes out the recent low at 107.13, it suggests that a lower top is in place at 110.53 ahead of a bearish resumption back down towards the 12-year low at 104.62 and then towards parity further down. So it's a key to keep an eye on these two levels, and a break on either end will be required for clear directional insight. At this point, given the recent price action, a break of 107.13 is favored, but we'll have to wait and see how that plays out. Sterling dollar. So cable has been locked within a consolidation over the past several sessions, with the market consolidating off the recent multi-year low at 146.35. At this point, the downtrend remains firmly intact, and the consolidation is favored to break to the downside, with a break below 46.35 to open the next major downside extension towards the psychological barrier at 140 further down. Any rally should continue to be very well capped ahead of 151.65, though ultimately a break back above 155.50 would be required to negate the bearish outlook for sterling dollar. Dollar yen. So this market has been locked within a consolidation over the past several days, even several weeks, though the market did break to a fresh multi-year high at 120.203 back in March. So ultimately, the extremely constructive outlook remains intact, and this consolidation is favored to break to the upside with a push above 122.03 to open the door for the next major extension towards the 125 to 130 area further up. Any setbacks should continue to be very well supported in this consolidation down towards 118, while only back below 115.55, the low that we saw back in December of 2014, would compromise the constructive outlook. Euro Swiss. So although Euro Swiss has traded down since recovering to 108.15 back in February, the market has been supported now above 104 on a daily close basis and could continue with this recovery with a higher low sought out ahead of the next upside extension beyond 108.15. But the market is going to need to hold above 104 on a daily close basis to keep the recovery outlook intact, with a close back below 104 to delay the recovery and open the door for deeper setbacks potentially towards parity. So it's important to keep an eye on the 104 level over the coming sessions to see if the market can hold above or if it breaks below. Aussie dollar. So Aussie remains locked within a well-defined, broader downtrend, though the market has been supported in recent trade, with the recent setbacks to fresh multi-year lows at 75.33 well supported, and the market breaking back above 76 and towards 77 thus far. Ultimately, the outlook does continue to favor the downside, and any rallies are viewed as corrective, with a lower top sought out somewhere below 79.38 ahead of a bearish resumption below 75 and towards 70 further down. At this point, only back above 79.38 would delay but not negate the highly intense bearish outlook for the Australian dollar. Dollar CAD. So dollar CAD has been locked within a consolidation over the past several weeks, but the consolidation is classified as a bullish consolidation given the move that had preceded this move and the highly constructive outlook with the uptrend firmly intact. At this point, an eventual break above the recent high at 128.35, that's a 5-year high, is favored for a break towards the 2009 peak at 30.65 further up. Only back below 123.50, that's the low that we saw in the range low from this consolidation back on the 3rd of February, would compromise the current outlook. Kiwi dollar. So Kiwi is locked within a well-defined downtrend, though the market has been consolidating and has been well supported off recent lows at 71.76. At this point, though, any rally should continue to be very well capped ahead of 77, with only a break back above 78.90 to compromise the bearish outlook. SPX 500. So the S&P 500 has been consolidating and is caught mid-range right now, but the market is showing signs of a critical high after stalling out at record highs at 2120 back in February. Look for a break below critical support now at 2040 to confirm the possibility of a meaningful top and an acceleration to the downside back below 2000 and potentially into the 1800s further down. But again, 2040 is critical, and a break below this level is required to confirm that topping outlook and accelerate declines. Inability to do so would keep the pressure and the focus potentially back on a retest of that record high. Gold. So gold is ultimately now constructive after the market stalled out ahead of the 2014 base at 1131 and rallied back towards some key resistance and just over at 1223. But inability to close above that level has put the pressure back on the downside a little bit in recent trade, though the market should continue to be well supported above recent lows at 1178. At this point, only back below 1178 would put the pressure back on the downside, and until then, a higher low is now sought out in favor of the next upside extension beyond that 1223 area and looking for a close above 1223 to really confirm and strengthen the outlook for a longer term base in the gold market. That's all for today.